Hello friends, welcome to the Mantri series of BFM. In Mantri series, we are covering all the numericals, objective questions, case studies, previous year questions related to all the subjects of CIB, compulsory ones, all of them. ABM, BFM, ABFM, BRBL. So follow the series till the end. Share it with your friends, like the video, like the channel, subscribe to the channel, click on the bell icon. Okay, let's start. Today I'll be dealing with capital adequacy and Basel norms. Capital adequacy and Basel. This is very important topic from your CIB perspective. Basel norms, you know, these are the basics of any bank today. So I'll be dealing in that. I'll be dealing with numericals as well as objective questions. So let's start. A numerical on basic CAR calculation. Now CAR means you can call it CRAR or CAR, anything. Let's assume a bank has tier 1 capital of rupees 800 crores, tier 2 capital of 300 crores, risk weighted asset of 2000 crores. So find a CRAR. Now we find this very easy one, easiest one. Find a CRAR in this case. What is the formula for CRAR? The formula for CRAR is, I'll write it over here. Formula for CRAR equals to CRAR, or you call it CAR. Anything is one and the same. Formula for CRAR is capital upon RWA, risk weighted asset. Capital upon risk weighted asset. Now when I say capital, capital includes two parts, tier 1 and tier 2, T1 plus T2. That is your total capital. And RWA includes three parts, credit plus market plus ops. These are the three parts of RWA, risk weighted assets. So this is how the CRAR is calculated or CAR is calculated. Okay. Now what is tier 1 capital? What is tier 2 capital? Tier 1 is known as going concern. It's a free capital. Free. Means if I lose this, nobody is going to question me directly. Of course, questioning will be there, but it's not it's not a paid capital. I have not brought it on interest. T2 is a paid capital. It's called as gone concern. Gone means I take a loan from the bank and then start the business. So that will be my tier 2 capital. Okay. So and credit, market and ops. These are the three RWs, you know this. We have covered these topics in details. Credit risk, market risk, ops risk. There is also a third capital, T3. But that T3 is known as a emergency capital. You cannot take that capital in calculations. That's the emergency capital whenever you have a credit market risk related issue. Okay. So now let's solve this. So here, what will be my CRAR then? What is my total capital? Kindly note, tier 2 capital can never be greater than tier 1. See, in this case, it's not there. T2 can never be greater than T1. Kindly remember this. T2 can never be greater than T1. If in exam, they give you T2 as, let's say, something extra, 1000. So you'll have to take 800 only. Okay, here it's already given less, so no worries. So equals to T1 plus T2, T1 plus T2, the whole upon RWA. So that is equal to what? 800 plus 300, the whole upon 2000, right? So get the answer, 1100 upon 2000. Get the answer, everyone. 1100 upon 2000. Yeah. 1100 upon 2000. What is the answer? So it is 0.55, right? 0.55. Okay, that is the answer. Are you getting this? 0.55. Are you getting it? So now, is it good or bad? What is it? Is it good or bad? Multiply this with 100. Okay? Multiply this with 100. So if you multiply this with 100 in terms of percentage, is it good or bad? So it is 55%. 55%. Now you tell me whether this is good or bad. 55%. 55%. Isn't it? CRAR 55% is huge. It's actually, it's too good for the banks. Okay. So what does RBI prescribe? RBI says your CRAR should be minimum 9%. Minimum 9%. And if you have a CCB buffer, see now that is made compulsory now. So now from 2021, this 9% is not applicable. You have to compulsorily take CCB 2.25%, 2.5%. Okay, that is equal to 11.5%. Minimum CRAR is 11.5%. Okay, and for nationalized banks, RBI has made it compulsory that you should have a 12% CRAR. Okay, nationalized banks. But kindly remember, 11.5% is the minimum one. 11.5. Okay. You have to compulsorily take CCB buffer now. Capital conservation buffer. Okay. So now, here it is 55%. Minimum required is 11.5. So it's too good, isn't it? Too good for a bank. In fact, it is very, if I'm having such a huge CRAR, then also it's very wrong. It means I have locked a lot of capital, money in my capital, which is not right, right? My main job is to do the business, right? It means my RWA is lesser. Simply it means that, see, it is 55%. So my RWA should increase. When will RWA increase? RWA will increase whenever I give more loans. It means I am not giving more loans. Okay, I have locked up the capital in the tier 1 and tier 2. I have to free that capital. I have to give more loans. Okay, got it? The primary purpose of calculating CAR or CRAR is to, means why do we have CRAR in banks? Measure bank's profitability, determine the bank's liquidity position, ensure the banks have sufficient capital to absorb potential losses, assess the bank's market share. Think now. What do you think? Should be the answer over here. Yeah. What is the primary purpose of calculating CRAR? Yes, it is. Primary purpose of calculating CRAR. The answer is, what have we got? Let me see in the comment section. Let me see in the comment section. It is potential losses. Means, do we have sufficient capital to absorb the potential losses? Whatever can come in future. Right? Do we have that much capital? Right? Next. Which of the following is considered as a core or highest quality of capital of a bank? Highest quality. See, three capitals are given. Tier 1, Tier 2 and Tier 3. And subordinate debt. This subordinate debt is actually the part of your Tier 2. Okay. Subordinate debt is a part of your Tier 2. Got it? It can be the part of your Tier 3 also. Kindly note, it can be a part. Because what is tier 3? Tier 3 is an emergency capital. So which one is better but? Which one is called as the highest quality? See, kindly note, T1 is your T1 is equal to going concern. Going concern. T2 is gone concern. Gone. Okay, gone concern. T3 is also gone concern. Kindly note, T3 is equal to also gone concern because that also you take it on somebody's lending only. Okay, you raise the capital in T3 in case of emergencies. So that is also gone only. So which is the highest one? Which is a good quality capital? Going concern. Why? Because what is going concern? Already I told you, it's equal to free. It's free money. There is no compulsion on me to give any interest or any dividend on this. On T2 and T3, this gone concern, I have to compulsorily give the dividends. Either I have to give the interest, or if I have taken it as a preference shares, then I have to give the dividends. Compulsory. But things are compulsory over here, which is not the case in free capital. Let me explain you with simple example. Suppose if I am having 1 lakh rupees, or let's say simple figure 10,000 rupees of my own. Okay, then one, and what happens? While walking it falls down. 10,000. See, I'll give you two cases. Own 10,000 rupees. 10,000 of my own. Now if it falls down somewhere, I don't know, I missed it somewhere, 10,000 gone. What will happen? You will feel sad. Okay? But after 5 days, today you'll feel very sad. Next day you'll feel a bit lower, then third day, fourth day. Fifth day you'll say forget it. So fifth day you'll forget. Fifth day you'll forget it. Forget, and you'll be for your own work. You'll be off for your work. Right? You'll be gone. Leave it. Right? Now suppose if imagine this 10,000 rupees you have taken as a loan from somebody. Loan. And now that falls down. Now that 10,000 falls down. Then number one, you will feel sad. That's right. But second part, that other person who has given you the loan, will he leave you? Not possible. You will have to pay the interest, even though you don't have money. Your money is also gone and you'll have to pay the interest. So which is better? Better is this own money. So tier 1 capital is the best one. Tier 1 capital is considered as the highest level of capital. Okay? Or core capital. A loan to government with a strong credit rating is likely to have a risk weight of, see, loan to government. I have given the loan to the government with a strong credit rating. Now here the word important is strong credit rating. Even governments have the credit ratings. Suppose if I give a loan to my country, Bharat, government of Bharat. So it is having good credit rating, strong one. Suppose if I give a loan to, let's say, government of Pakistan, or government of, let's say, Nepal, or government of Sri Lanka, no credit rating. There I'll have the risk. But here if I give the loan to my own government, which is very strong, the GDP is strong, credit rating is strong. So in that case, what is the risk percentage? Or what do you mean the risk? Risk means failure, default. What is the chance of default? 0%, isn't it? For a good credit rating, the chance is 0%. According to RBI norms, Indians scheduled commercial banks are required to maintain a minimum CRAR of 8%, 9%, 10.5% and 12%. I gave you this figure earlier. See, there is a catch in this. The answer is 9% without buffer, without CCB. CB. Okay. But from 2021, RBI has made it compulsory that you have to maintain CCB. So now you have to maintain CCB of 2.5%. So your total CRAR becomes 9% as a basic one plus 2.5%. So it becomes 11.5. 11.5%. Okay. And for government banks or nationalized banks, RBI has made it compulsory that you should have it a 12%. No, it's not RBI, it's made by the government only. Right? But for your exam purpose, kindly note 11.5 is the right answer. 11.5. Okay, why? Because nowadays this CCB is very much compulsory. Without CCB, you cannot have a CRAR. Okay, move on. Which of the following risks are taken into account when calculating the capital adequacy ratio? So which risks are taken into account? Just now we did this numerical. Credit risk, market risk, ops risk, only credit, only market and ops, only credit and market. Yes, just now we did it in the first numerical. It is? Yes? All the three, isn't it? All the three. Credit, market and ops. All the three. Credit, market and ops. ABC Bank's financial position, numerical, case study. ABC Bank's financial position is as below. Tier 1 capital, common equity tier 1. Means it includes all this equity, capital, reserves and surplus. Okay. So that is equal to 10,000 CR. Additional tier 1, 81. So that is equal to P, that includes P and CP over here. So that is 2000 CR. Tier 2 capital, subordinate debt is 4000 CR. And revaluation reserve is 1000 CR. Okay. Now you have to find out, calculate the capital for CRAR calculations. Calculate the capital for CRAR calculations. Let me modify this question slightly because this is very easy. Let me modify it a bit. Okay. I'll modify this question and make this 14,000. I'll just change one figure over here. That is 14,000. Say this. Subordinate debt is 14,000 CR, revaluation reserves are 1,000 CR, and these 10,000 CR, and this additional tier 1 2,000 CR. Now you have to calculate the capital required for CRAR calculations. Capital. Now there are some catches over here. What are the catches? Look at this. Kindly note, common equity tier 1. Common equity tier 1 includes 4 parts. 2 are given over here. Equity share, capital, reserves and surplus, plus it includes 2 more. 2 more is basically your revaluation reserve. Okay, revaluation reserve and net profit. So 4 parts are there. Okay, revaluation reserve and net profit. I'll add this. Net profit. Net profit. Profit and revaluation reserve. Reval. Reserve. Okay. Now there is one problem in this numerical. What is the problem? Do you know? What is the problem in this numerical? This revaluation reserve is given in tier 2 capital. This is wrong. That's why I gave this over here. This is wrong. It is not right. Got it? It is not right. Got it? It is not correct. How many of you spotted this? Revaluation reserves are a part of tier 1 capital. They are not the part of tier 2 capital. And that also they are the part of CET1. Common equity tier 1. They are always taken at 45%. They are taken at 45% of the given figure. Whatever is given, you'll have to take it at 45%. Or we call it 55% discount. So basically it means 45%. So now you'll have to calculate the CRAR calculations. Capital. Let's calculate one by one. Tier 1. Okay, let's do it here only, isn't it? It will be easier for us. So, tier 1. What does tier 1 include? 10,000. So, we'll take this 10,000 as it is. 10,000 as it is. Second one. Additional tier 1, PNCP, 2,000. As it is, no change. What is my total tier 1 capital up till now? 10 plus 2, 12,000. But this revaluation reserve, I have taken it over here. But that is to be taken at 45%. So my reval reserve over here will be, reval reserve over here will be, give me the figure, everyone. What will be my reval reserve? I have to take it at 45%. So 1000 into 45%. So that is equal to 450. What is my total tier 1 capital now? Total 10,000 plus 2,000 plus 450. So 12,450. T1 equals to 12,450. Okay, crores. Got it? T1 equals to 12,450 CR. Getting this, everyone? What about T2? T2 is only one, right? Only one. What is one given? Subordinate debt. That you have to take it at 100%. Complete 100%. So 100% you will be taking it. So what is the amount? 100%. So 14,000. T2 will be 14,000. But there is a rule. What is that rule? That rule says that T2 can never be greater than T1. T2 can never be greater than T1. So T2 will be what? Maximum what T2 you can take it as 12,450. Okay, so your total capital will be, total capital equals to 12,450 plus T1 plus T2, 12,450. You'll have to take 12,450 only. You will not take 14,000 over here. Okay, you will not take 14,000. You will take 12,450 only. 50. So what is the answer? 12 to the 24. 24,900. So the capital is 24,900 CR. This is your final figure for calculations. This is your final figure. Don't miss this. Okay? Very important numerical. Now before going, everyone, kindly join the new Adda 24/7 batches. Always join through the app. First download the app, then do it. Download the app first. Okay? Join the new batches. Because in the app you will be getting 1% extra. Okay? See this, Officers Pro batch. ABM, BFM, ABFM, BRBL, all the subjects are covered. Numericals, objective questions, case studies covered. E-books, mock test, online classes, okay, recorded videos, everything is there. Okay? Click on buy now. Put the code Y432. Y432. See this, 80% discount plus 1% extra, 81%. 81% discount you are getting. And if you purchase Mahapack, increment Mahapack, see, this is one of the best Mahapacks for you. CIB increment Mahapack. Right now you are getting double validity. You buy for 6 months, you get it for 12 months. You buy for 12 months, you get it for 24 months. You get 15 plus batches per subject. Plus you get physical books and e-books. Both of them. Question banks. Both of them. Mock tests are there. Full length mock tests are there. It's a win-win situation. Double validity, 81% discount. 15 plus batches. So definitely join this. Okay. But never forget the code. The code is